We're live.
All right, everybody. Welcome to the Beef and Bitcoin podcast. This is episode 15 with your host, Brett and CH. We got a new microphone today for me, so let me know if the sound levels are total bullshit. Shoot me a DM or leave us a comment if the audio quality is bad. But we're trying a new mic, so we'll see how that's going. And then next episode, we'll have another new mic in there, so it should sound even better. But today's topics, we're going to talk about the Bitcoin Times article that came out. It was an awesome read. There's a ton to unpack in there. It might be my new favorite thing to send to future Bitcoiners who are interested in learning more about Bitcoin and why it even makes sense to learn more about it. Just really breaks through a lot of stuff. So we're going to go through a lot of the great one-liners from that episode and take a deeper dive on that. But before we get started, how you doing, man?
Not doing too bad. It's a pretty interesting week again in Bitcoin, hanging around 5,000. And then also, of course, just things in general are getting very interesting in all markets. And I know we're about to just go through this Bitcoin Times article, which I got to read over briefly, and it's very good. And we'll have some good stuff for you guys. But I wanted to bring up briefly the Bitcoin chart here because things are going to get interesting here very soon. Obviously Bitcoin hit almost 5,500 the other day, at least on BitMEX, which I'm showing right now, which is exchange. It's exchange. But point is the price action here is looking pretty good in the daily. And even though with the weekly not looking as good with the way it finished, I still think there's a lot of momentum here, and even though that's not pretty, like the 3-day and the 1-day look pretty good. And then there's also a bullish engulfing bar in there, and that's going to play pretty well. It'll be interesting to see what happens here. I think we're probably going to FOMO to new highs. I just think there's a lot of people still calling like, okay, this is a bear market, blah blah blah. And yeah, we get to the bear market, but like we saw it like where people just shorted Bitcoin like when it ran past 1,000. Like I read these old Twitter stories and shit, and you see people talk about people who kept trying to short it, and you could imagine that frustration, 1,000 to 20K.
Yeah, that sucks. Bitcoin Tina had a really good tweet today, and I don't remember what it was off the top of my head, but to summarize or paraphrase, it was pretty much like, people who are trading or getting short on Bitcoin are just really going to get themselves into some trouble because they're going to look to short at the wrong time thinking we're going to dump, and that's exactly when we're going to take off.
Yeah.
And you're wrecked. You're wrecked when you do that kind of stuff. So I know from past experience, I have no business trading Bitcoin, and I'm not going to. I'm going to stack and hodl and be as patient as humanly possible. And I let everybody try to do whatever they're going to do, but understand the consequences, because the one day you take money off the table and it runs, you just kick yourself in the ass. It's the worst feeling ever.
Yeah, he's right about the worst feeling ever on those things.
It's the worst, dude. It's the worst. Like I remember one of my good friends like sold a little bit of BTC at 6,000 back in 2017, and he ended up buying back the same exact day because it kept pumping, and he was like, shit, why did I even sell? What was I thinking? And I was like, I don't know. I mean, if you think about it right now, sure, they're up technically. We're below 6,000. It was a good trade, but you missed that whole run up to 20K thinking that you're selling the top or you're ready to get short, and then it pumps beyond your wildest imaginations. Nobody thought we were going to 20K when we were at 6K for the first time.
Yeah, no, that like I'm just like, you can see my screen here. Like people understand, like 2017 was pretty fucking ridiculous.
Yeah.
There's I don't know if anything will ever compare, to be honest.
The only thing we're going to be able to compare it to is the next bull run, and we're going to talk about the similarities to 2017 again, and whatever year that is. Just like the people who are probably talking about the same thing in 2013. But the bull runs get crazy. Yeah, looking at that now, and not knowing what was going to happen in the future, it was crazy. I wouldn't have expected any of this to play out. I didn't expect 20K. I didn't expect back down to 3,100. It's been a roller coaster ride of the last 24 months, and I'm ready for the next 24.
Yeah.
I can't fucking wait. Actually,
Yeah,
I am so
understand.
pumped for the next 24 months, and I don't think people realize how pumped I am for the next 24 months, because the next 24 months are going to happen regardless of what I say. Like, they're going to happen, and I'm just going to be patient and watch and talk, and talk shit about it the whole time, and because it's fun, and I'm going to make more memes and shit post, and it'll be fantastic. But yeah, I can't wait to reference back to this day.
Like, it's funny for me, because it's like, I knew about crypto beforehand, but I didn't really get into it till like late spring of 2017. Really get into it, and like when I just like after even like a week or two, and that's all I did, dude. That's all I did. Like, even I had like a job where I had triple monitor set up, and all I did was, when I wasn't like working or when I had like time break, I would just have like crypto shit up. I was just trying to figure out what the fuck is going on here. Like, and I knew something big was going to happen. I didn't know what. I didn't know what to expect, and then that happened. Yeah, like it started to get like kind of when like I think August started rolling around and Bitcoin broke again to like whatever it was 5,000. Like, things were like, okay, wow, this is kind of big. And then after that fucking bounce on the 16th, that was the most retarded thing ever. Like, I bought like some Bitcoin and like some shit to the bottom of that, and then we just went up straight. Like the Bitcoin literally bounced directly at 3K. There was the funniest fucking psychological price event ever. Like, literally hit 3K and bounced, and then obviously everything rallied with it. I mean, and look at that run, like, ridiculous.
Yeah, those were the days. It's an emotional time for everybody. I mean,
yeah, everyone. It doesn't matter who you are.
Things are great. You feel like Bradley Cooper in Limitless. Like, things are just going your way. It's just the best. It's the best feeling when there's a pump, dude. It's insane.
Dude, there's nothing.
Not even fun.
Yeah, I don't know. Like, things just started to get so retarded in December, and I know we're a little off topic here, but like, it's hard to explain to people like how ridiculous things got so quickly. Like, when all of a sudden everyone wants to know about this crypto thing, you're like, oh fuck.
Yeah. Yeah, I'm gonna be getting a lot of text messages and more DMs again as soon as the bull run starts. I mean, which is exactly how I can firmly say that price drives adoption, because the text messages only come in at one point, and that's when the pump is coming. And anybody who disagrees with price not driving adoption is wrong. It's
bullshit.
You can use your own evidence to know your own experiences to be like, yeah, man, people really only talk about this when it's pumping. Yeah, why do you think that is? Because price drives adoption. Nobody wants to buy something that's going down. Why would anybody want to buy Bitcoin for the last 16 months? It's been going down. Like, of course, if you know enough about it, you'd be like, oh, wow, this is a really good deal. These are good prices. I'm going to scoop some up. But if you're the average fucking dude on the street, you're like, why would I buy that? It keeps losing value. So I get it. I totally understand why you wouldn't want to buy it right now, for sure. But everyone's going to want to buy at 20K. That's the thing that people don't realize.
You know, it's really funny. It'd be really cool if we did it on a chart. It was like the amount of DMs, text messages, and stuff we got from people regarding crypto around like on each daily candle. Just like put a number above it.
Oh my God, that might be a new indicator.
Like, seriously, think about that. Like, and I can tell you for a fact when Bitcoin in July went from fucking 6,000 to 8, I know I got hit up there, and then like recently when Bitcoin, some people I think would probably texted me here when price down, but definitely when we recently had this thing, what do you know?
Oh, yeah.
What do you fucking know? People hit you up, they're like, hey, what's going on? Because it just went up 25%, dude. I think Bitcoin Cash is up like 700% since like December. I shit you not.
Oh my God, I believe it. Somebody actually had DM'd me that today.
I was looking at, I think some chart was showing like Peter LeBrant posted it about like all the altcoin, like the top major caps in Bitcoin and the percentage they're up since. I think Bitcoin's up like 35% since like.
Yeah, that sounds about right.
And yeah, Bitcoin Cash here just going full retard. Like it's It's like that pump was ridiculous. Look at that. It went up 200% in fucking like 5 days. And then 300, yeah, so 364%. I think Litecoin's up like 350. Like I don't think people understand, like there's people out there who margin trade this, so like that's huge. Like 200%, and like if they're on 5x leverage, it's 1,000% trade. Like that's ridiculous with these markets here going on. And that's why people trade crypto, because even they don't have to do any margin trading, and they make 300, 400% moves in days.
That's right.
You don't see that in other markets. That's why there's just this breed of crypto traders, and there's people who just came to crypto, Bitcoin alike, just because you don't see it. And then also everything's open 24/7. So it's kind of the anarchy thing, and that things are just a little different, and the whole 24/7 thing is really cool. I don't know, like granted, it'd be tough to do that, and like the reason they don't do it like with like real markets is like if like everything was open for 24/7 to trade, liquidity would be such an issue, like volume wise.
Oh yeah. The fact that we have 24-hour markets are huge. I love that.
Yeah. No, and like not like, okay, you could say there's futures, but it's not the same. And like sure, I guess Forex trades, but it still doesn't trade. And same with commodities, they still don't trade 24/7. Like holidays, etc. Like the CME, CBOE will shut down, like Christmas, obviously, New Year's, etc. Stuff like that.
Yeah.
And then, go ahead.
No, go ahead.
I was just gonna say, and then that translates to like what you can do with Bitcoin. You can move it around anytime, spend it, etc. There's no holdbacks there.
Yeah, the whole thing plays into why Bitcoin is great. And all you need to do is send one wire transfer from your bank to the exchange on a Friday afternoon to realize that the fiat legacy system really fucking sucks. It only takes one time, and the light bulb will go off instantly. That was the moment for me. And I was like, this doesn't make any sense. It's my money. You're telling me I can't send it to the exchange right now? Like, I'm trying to buy the dip, and you're telling me that my money's not going to get there until Monday. Like, you could be costing me thousands of dollars right now because you guys can't fucking settle on a Friday afternoon or Saturday or Sunday. And let's not forget, Monday could be a holiday too. So then I'm really not getting my money until Tuesday. That's 72 hours. It's bullshit. You can send Bitcoin at any time, any place, anywhere, damn near instantly. It's beautiful. But that was the light bulb moment for me. And speaking of light bulb moments, a fucking bunch of them went off when I was reading the Bitcoin Times article.
Yeah, I agree here. This is a pretty good little 32 pages, I think.
Yeah, it was a long one.
Yeah, it's pretty long, but it's got some good nuggets packed in there.
Yeah, I like the format of this, actually. I would think about writing like some sort of ebook and make it look similar to this with, like good pictures, charts, stuff like that. It wasn't 32 pages of like, 10-point font, the whole thing. It has some good info. But
should I just read this first title here?
Yeah, go for
it. Pretty good, I think.
Yeah, read it.
It says breaking news. RIP blockchain. Blockchain is dead. What important truth do very few people agree with you on? And that's Peter Thiel, 0 to 1. In 2018, I was backstage talking about how ridiculous blockchains and ICOs were. My talk was entitled Blockchain's AOL Moment, in honor of the complete failure that AOL became and the magnificent success that silly, useless, slow network the internet had become. Yeah, it's pretty good. Little opener right there. It's like probably a paragraph, but CH and I were talking about earlier how in the early 90s there was this thing called the information superhighway, and that was supposed to become the internet. And there's actually a pretty good podcast if you want to learn about the history of the internet, or it's called The History of the Internet. It's a podcast. You can find it on Apple Podcasts, I know. But anyways, the information superhighway is this big deal that a lot of big talking heads are talking about, especially Bill Gates. And Bill Gates wrote a book, The Road Ahead of Us, if I believe the title's correctly. And there was two different versions published, one in 1994 that mentioned the information superhighway a numerous amount of times, like talking about 100 plus. And the internet was mentioned a handful of times. It was clear as day by 1995. This is when the internet boom just started to really kick off, and then you started seeing these IPOs starting to come out. In '95, there was a different version that came out and mentioned the internet hundreds of times. Information superhighway, handful. They realized, Bill Gates and the guy who wrote the book, I can't remember, realized that they made it, obviously huge. It looked so dumb a year in hindsight. And like as you've talked about before, as you said, price drives adoption, and this could look really dumb in hindsight. All these, I guess, blockchains or ledgers, if Bitcoin really takes off and just captures mainstream.
Right, that's exactly right. I mean, you can see very clearly when you listen to more of the academics or the enterprise blockchain people talking, it's a whole blockchain, not Bitcoin kind of game that they're playing. And it's really tough because it's a technological game. It's like highly technical. A lay person wouldn't know the difference between like they hear blockchain, they think, oh wow, that sounds pretty tricky. I'm sure that solves a lot of problems that a database couldn't solve. And when in reality, that's couldn't be further from the truth. And there was another, I'm trying to see what I had written down here. Yeah, I was just thinking like everyone's going to realize that Bitcoin was like the blockchain that they were looking for the whole time, just like Bill Gates had to go back and write another chapter in the road ahead about the internet. And you're like Chris Berniski is going to write another book after crypto assets, and it's just going to be called Bitcoin or whatever. Yeah. And it's only going to be about Bitcoin because he's going to be like, yeah, sorry about that last book I wrote that gave you all that really shitty financial information and advice on, well, it's not advice, but it was just a ton of stuff on shitcoins and ICOs.
Did you read it?
These like crypto. Yeah, of course.
Okay,
I read it when I was a shitcoiner, and I was like, well, this is, yeah, I'm like, oh, this makes a lot of sense. Yeah, like, this is really good stuff.
Chris Berniski and Jack Tatar wrote that. I think they released it early 2017.
Yeah,
it was released pretty early.
It's not that it's bad. It's just like that's going to be the book where it was like, yeah, he was kind of close, but he really fucking blew it because turns out we only need one thing as money, and there's probably only going to be one blockchain. We're not going to need a million of them to do a bunch of different things, and it'll look stupid. Just like Bill Gates thought we were going to have more than one internet. Mm-hmm. Trying to create these walled gardens of intranets and, paying per use of sending information back and forth. Like, it's stupid. You used to have to pay for AOL, like with CDs, like on a like hourly basis to get onto the internet. How stupid.
That's pretty insane to think about.
You know what I mean? Like,
I guess we do pay now for like internet. So
yeah, for sure. But I mean, now it's changed to like, bandwidth or, it's not thought of the same way. Like you had to go to AOL to get access, and now you get access to the internet from your internet service provider, which is, the telephone companies. And they talk about that in the, in this article. It's really great closer towards the end when it gets into comparing Bitcoin and the internet. But it's just a good example of like the blockchain meme is a really good example of taking that walled garden approach that AOL took, trying to like, all right, let's take the internet and let's get rid of all the stuff, all the bad stuff, and let's, put it in a little walled garden and put a nice bow around it, and people are going to want to use it. And that obviously didn't work. Everybody wants the free open internet that they can use however they want. And that business model just got destroyed. Just as the enterprise blockchain business model will most likely get destroyed also. I don't think anybody's going to be using Hyperledger to track their avocados from Mexico to the East Coast. Call me crazy.
Yeah, I wouldn't call you crazy for that one. It's a it's always interesting to see like how the history of the internet played out. And what it's morphed into too. Like, I guess people could imagine devices, but we didn't imagine like people walking around Snapchatting each other like 20 years ago. Like,
exactly.
Like that's just something that just was built up top because of users came on. And like you think about internet's march to dominance and how quickly that was. And I'm not, saying yay or nay that Bitcoin fails. I'm just saying like when you look at how quickly the internet went from 1 million users. Like when you look at those graphics,
right? It's an exponential growth curve.
Yeah, I can just pull up a graphic.
Yeah. I'm jumping ahead slightly,
You go ahead.
but on the same topic, a quote from this article. And whilst I know it sounds far-fetched to think that today's financial institutions will one day be on-ramps for Bitcoin, remember that 30 years ago, it was completely insane to think that phone companies would merely be connection points for the internet. And that is exactly what happened. That's all that phone companies are used for. How many people do you know that have a home phone?
Very few now. Very few people even use them.
Exactly. All phone calls are made over the internet now. All video calls are made over the internet. Everything that you watch, listen to, stream, consume, all of your banking is done on top of the internet. Everything moved from legacy physical paper infrastructure onto the internet. And now there's a new opportunity to take a new open architecture and tool and build new things on top of it. And that's the transition that we're going to see. It's just I can't put a timeline on it. It's already been 10 years, which a lot of people don't think about. So when you're thinking about exponential growth curves, like the ones that you have on your screen right now, the next 10 are going to move significantly faster than the last 10 until you hit that inflection point. And then, buckle up, because here we go.
Yeah, I mean, if you can see this chart on YouTube, it's a technology adoption by households in the United States. And like when you look at the internet or the cell phone, like it's just a vertical line. I mean, it really takes off. Like the internet, so it basically, early 90s, and the user adoption's at 90% now. It's like, it's fully saturated market, pretty much almost.
Can you imagine when money becomes a saturated market, when everybody's using the same one?
That'll be interesting.
Yeah, I mean, it's just really efficient. I'm sure everybody would like to use one thing as money. Why wouldn't you? Do you know how much it sucks, like traveling around with different currencies if you're going on on a trip or worrying about anything like that? It's the worst. Even for trade, if you're a company if you do international business, I mean, dude, the whole thing it's a nightmare. It's a complete
people
mess.
Get wrecked. I heard a little bit ago, someone got wrecked because the fucking Chinese yuan went fucking just vertical, or the USD CNH, which is Chinese yuan or whatever. I'll just pull up the chart so people on YouTube can see what I mean. Like the yuan went vertical and lost a lot of value, so people holding the yuan got screwed.
Yeah, that's why Chinese investors are dumping all their money into real estate and leaving it vacant in all of these cities around the world. So if anybody doesn't think that they use real estate as a store of value, I believe that's incorrect. So that's another opportunity for Bitcoin to shine as a store of value. I'm sure if it were easy, or maybe more those high net worth investors who are trying to figure out how to get cash out of China and then buy real estate in San Francisco or something like that. It seems to me like it'd be way fucking easier to just get a hold of some Bitcoin instead and hold it. And you don't have to worry about all of the inherent risks and other fees and costs that come along with owning real estate in a populated city.
Yeah, it's pretty interesting. Like
it's a no-brainer to me. I don't know. Maybe it's just
like as here, when I'm just going to the chart here quickly. The Chinese yuan, it lost quite a bit of value in that short period of time. I think 8% the U.S. dollar went up against it, plus, which is quite a bit. People don't really realize how much it is. But if you're in a business holding millions of dollars, if you're a high net worth person in China who's a billionaire, that's a lot of money. So that's why, as you said, them buying real estate, you see it in Vancouver, Canada, you see it in the U.S. They just buy shit up.
And they just sit on it. You just leave it there. That is the function of a store of value. You're trying to put your money somewhere where you don't think it will decrease in value. If you had a money that worked as it should, that's something that you wouldn't have to do. Store of value is just a function of money. It's what makes it money. And that's why I like storing my wealth in Bitcoin, because I know it's not going to be inflated by 12 people in a room deciding what to do with the money supply.
Yeah, it's pretty interesting when you look at the Fed now, what's going on with that. That's getting really interesting. And I don't think, here again, so many Americans are worried about things that don't matter. Congratulations to Tiger Woods for winning the Masters today. But there's a lot of really important things going on. Like your fucking currency, like the US equity market, that's just, fundamentals are gone, the bond market, the debt. And there's so many bad things going on. People are so distracted. It's bad. That's how I put it. It's really bad.
It is. It really is. And to tie that back in, there's a lot of people in this space who are really concerned about a lot of stuff that doesn't matter, like shitcoins and blockchains that don't exist. What was I going to say? Yeah, to just to kind of beat this horse a little bit more, the article mentions there are zero reasons to use a blockchain if someone is managing it, and that's it. That's exactly correct. I was listening to a podcast interview from one of the, I think the chief cryptographer from Blockstream, and he was describing Bitcoin as mechanized money. He's like, it's an engineering solution just to automate the managing of the money supply and making sure that there's no double spends. So it's just a trust minimized protocol, human design that automates the function of money. So it's mechanized, right? Nobody else has to worry about it or manage it anymore. So think about all of the people involved in the world and all the countries who are being compensated to like manage their money supply or deal with, yield curve, setting interest rates, all kinds of bullshit stuff. Now there's a solution that automates all those functions and nobody has to worry about it anymore. It's just a lot more efficient. The solution itself is inefficient to make sure that there's no double spends, but overall it's more efficient because nobody has to fucking manage the system anymore. It's automated.
That sounds pretty interesting, to say the least.
Right?
Yeah.
I mean, that's just a good way to say like, oh, we need this blockchain and, so-and-so to manage it and change stuff. It's like, well, then you have a database, my friend. That's what that is. Like that's the difference between an SQL database and Bitcoin's blockchain.
Mm-hmm.
So, but I digress.
Oh, that's a good point. I think it's like when I first started to get to crypto, I went through all the IBM blockchain stuff because I was just curious. But here again, it's people talking about it and not some people just don't get the point of Bitcoin. I guess. I guess it's just a hard money. I guess it's the whole point.
Yeah, it's understandable. I could see why someone wouldn't understand why why anyone would think that it has value. I get that. I was like that for a while too. I'm sure I heard a lot. Yeah, I'm sure I heard about Bitcoin a bunch of times. I was like, yeah, it sounds stupid. It sounds like a scam. Even when it was being pitched to me by one of my friends, I was like, dude, this doesn't make any sense. Like, no one's going to use this. And then after a couple of weeks of digging, I'm like, oh, maybe this is pretty cool. Maybe this will be a huge thing. And then you start comparing it to things like the internet, and I think that's when it started to make sense for me. When you think about that network effect and how the internet kind of transformed everything. This is just stage 2 of that. I think when you look back in hindsight, we'll be like, obviously we were going to have a native currency native to the internet. Of course. How did I not see that one coming in 2010 or whatever?
Yeah. Sorry, there's a car beeping outside. Can you hear that? I hope you can't.
Yeah, I can hear it. It sounds like no, it's not a big deal.
No, it's because someone just got back, or someone just, or it's my roommate. Fucking one of the two.
Yeah, on that same topic, on page 8, I have another note here. I'm going to read this quote really quick, but it has to do with Bitcoin's blockchain being different. And it says, security and immutability are a derivative of cost. In other words, Bitcoin is secure and immutable because it has a currency baked into the protocol. And that's when you think about like the IBM blockchain, and it's like, well, can you really abstract the currency out of it and you still have a workable product? That's why Bitcoin is secure and immutable, because there's a currency baked into it. Like there's there's risk there. There's a reason to keep it secure. So when you someone says, oh, Bitcoin's cool, but the blockchain technology, that's really what we should be focused on. And that's like, no, man, you're just focused on like a slightly different data structure of a database. And because it doesn't have a currency embedded into it, it's completely worthless. But the proof of work is the whole innovation there, right? That's what allowed us to have mechanized money, an automated system with no trusted third party. And the energy consumption is critical because that's like your embedded sunk cost that everyone has to spend in order to participate in the mining function. Whereas that's not necessarily true with proof of stake or say like a fiat system. You can just turn on the printing press. It really doesn't cost you anything. So that's the difference. There's no skin in the game there.
There's no need for even a printing press now. It's bad.
Right. It's all digital. That's true.
It's fucked.
Like it doesn't. Right.
Like fiat's the ultimate shitcoin. I don't think people realize how fucked it is.
Yeah.
Like I don't mean to say it like that, but it is the ultimate shitcoin. And like the biggest issue is just so many people aren't paying attention to what's going on. Like that's what bothers me more than anything is that people are just so distracted by so many things that don't matter. And then there's this giant looming debt bubble that no one cares about. And I'm just like, God damn it.
Yeah. I mean, until someone suffered an economic loss, they don't really take anything all that seriously. Like somebody's just gonna, someone getting close to retirement right now within the next couple of years, they might need to take a haircut on their position on the S&P to get a little bit of a wake up call. But when you've been in a bull market for the last decade, arguably more than that, you don't think about those kinds of losses. You just think it's going up forever. I'm invested in my mutual funds and I've been putting away in my 401k. I'm going to be able to retire at 65. And because they told me that, 30 years ago, but you weren't too concerned about all of the money printing that's been going on for the last, I guess since 1971. And before that, but I mean, that shit has repercussions, man. Like it's worth taking like 10 hours and doing a little bit of research on this and choosing. Now you have a choice. You can opt out of that system if you want to. I mean, yeah, there's legal tender laws. That's why you have to use fiat money. But now you have an alternative. So if you ever wanted to say, I'm not sure I want to keep all of my cash equivalent in fiat, now you can opt out if you want to, and you can hold a money that isn't easily inflated and has a fixed supply. So you know exactly how much of the total money supply you have at all times, and it's guaranteed not to change. And that's powerful. That's super powerful, especially for people suffering from, very steady inflation or even hyperinflation, like we've seen many times in the past.
Yeah, I was going to say, I bet in 12 months that people are going to really care about the economy because they're going to feel the hardship. It's just a reality. And like, it might even be sooner, dude. Like, it really might be sooner. Like, I don't think people understand like how quickly things got bad in 2008. Like, 1 week Jim Cramer's recommending Bear Stearns at $50 something because it's fallen a shit ton. And a week later, Bear Stearns is less than $2.
Yeah, that I wish I would have been paying attention more in 2008. I guess I was in college and I didn't know any better, but I do remember gas prices being like $5.30 a gallon.
That's insane.
Yeah. And I had an Evo at the time and it took premium. And I remember filling up 93 and I was like, oh my God, man, this gas is expensive. And one of the kids I went to high school with, I saw him at the gas station one time. He had like an IROC Camaro. It was real shitty. It was really shitty. And he would only get like $2 of gas at a time because he like literally didn't have any money. Wow. And I was like, that's not even going to get you to work, man. Yeah. Like that Camaro gets like 8 miles to the gallon.
Dude, that's so bad.
Yeah, but like, I mean, I guess I wasn't thinking that much about it then. Like, I was like, oh man, like this really blows. Dude, that was a long time ago, dude.
I know.
That was a decade ago.
It really was. Yeah, it's a long time ago. Look at this. Look at the AIG chart, dude. That's the weekly. Look at that.
Yeah, I mean,
$1,200 a share to fucking 20 or less.
I mean, they got bailed out, dude.
Yeah, they got bailed out. Exactly. AIG completely failed. They had people realize everything was destroyed. All those insurance policies done.
I know.
Like this is how bad it was. Look at that.
Yeah, and if you start taking a look at AIG's balance sheet and how much reserves they have up from in their insurance business, it's really ugly. It's really ugly.
Dude, look at that. Oh.
Yeah. It's so bad.
So if you aren't watching right now, like if you're just listening to this podcast, I don't mean to like what you heard, but like if you could see the chart here, maybe we'll screenshot this and put it in there. Well, I can't, I guess, but this chart's ridiculous.
Yeah, it can get bad real fast.
This is a monthly chart. I mean, yeah, like that got bad so quickly.
Yep. Yeah. I don't want to say I'm going to be laughing all the way to the bank if we see this again. I'm sure my 401k won't be too thrilled about the dump either, but I don't know. I'll be happy that I'm holding a little bit of Bitcoin at the very least, but I definitely, I don't know. I might say I told you so, but I'm wrong all the time. So everybody else might tell me they told me so, and that'll be it.
Dude, it lost 99.55% of its value from June 1st to March 2nd of 09.
Wow.
That's the definition of the ultimate shitcoin. Like that's BitConnect level.
It really is. It really is.
Like
shitcoin level.
Dude, could you imagine like the pension issues with that? Like think about you're a retired AIG employee and your stock goes from $12.91 a share to $5.84.
Yeah, I mean, that's actually a really good point because the unfunded pension liabilities are in the trillions of dollars. There's a lot of people who are getting ready to not work for 30 years and are thinking that they have money in the bank to cover their expenses, and they might not, dude.
It's very interesting because like you think about that, like that's how many people who might have retired in like 2000 or something like that, and 6 years later they're fucked. Like think about it, they retire as and they're holding GE stock, best stock ever because they probably got in early or whatever, in the 80s, and they're holding the best stock ever, and they maybe got in at $50 and it goes to 1,700, and then it goes they keep holding and it goes to fucking $5.
Yeah, I haven't met anybody that I work with yet who was close to retirement age. Then I'd love to hear some stories about people who were getting ready to retire in like 2001.
Yeah.
And they got wrecked. And hopefully they retired before 2008 or else they got wrecked again. Could you imagine getting wrecked twice in one decade?
No. That's painful. I mean, you think about the people who like retired right before 2001 and got hit in that bear market. And then again in 08. Like think about you're 55 and retired, then you just get wrecked. I think about that. People who might have retired with $10 million and then they're by 08, 09. And I guess we can laugh about it, but still, it's fucked. Like you
can go from 10 million to 1 million. I mean, pretty fast, dude.
Yeah, I don't think people realize like a lot of people I guess don't understand like how like people's net worth works and like things like that, and like with people own assets like that or like housing or stuff like that. There was a lot of people who owned a lot of properties in 08, 07, 08,
boom.
And boom, then they go valueless and then they're done. They lose all the equity in their homes.
Yep. There was a lot of people who were very highly leveraged, pretending to be real estate investors. And they just got absolutely annihilated buying, 10 properties in a year. This is their first year of doing real estate investing or property management. They have no clue what they're doing. They're paying way too much for per unit that they were looking to rent out, highly leveraged. And then that all starts to unwind and you're wrecked. Like that's it. That's going to happen again for the next time. There's a lot of real estate investors who are very highly leveraged right now, and they might have 100 units, let's say in Scottsdale. Well, what happens during the next recession when all the people from Scottsdale move back to the East Coast or somewhere else to find jobs when there's no more jobs in Scottsdale or any town? Pick any town USA. Yeah, man, you're going to have some fucking vacancies in your rental portfolio. And you're not going to be able to even cover the interest cost.
Yeah, exactly. I want to make one more mention. the reason that stock price is all jacked up for AIG is because they did have a share split of 1 for 20 shares in October of 2009 instead of something like that. So that's why the share price is all jacked up, because they adjusted their shares a lot. So that means their shares were worth nothing, dude. They must have been worth pennies, I think, because they did belly up completely.
Yeah, I mean, it's a mess. It's a mess.
It really is. It's hard to explain. Like, God, if you show this chart to anyone else, like just a normal human being, okay, that's an issue. And that's like
Right.
how quickly things went bad. And I like this time around, there's central banks don't have the ammunition to do it. They've done quantitative easing for a decade now, and it's clearly failed. Like the U.S. stock market, when you look at the last decade, is like the U.S. equities are the only ones that actually have risen. And I don't know how European markets work with their corporate system with buybacks, but when you look at the numbers for how many shares corporations have bought back of their own shares versus every other buyer, like institutional, retail, etc., it is enormous difference, dude. In corporations, the buybacks completely outdo. It's not even close, dude. There's so many more buybacks, and it explains why you get such a rise in share prices, because you just suck up the float, so there's nothing left to buy, and it just increases that demand, and so it's ridiculous.
Yeah, we're gonna do the same exact thing with Bitcoin.
Yeah, it's gonna get very interesting.
We're just going to dry that shit up. I would like to say, though, there is no, I guess the equivalent of share buybacks for Bitcoin doesn't exist, because there's nobody in control who's just drying up the supply and buying it back like you have in the equities market. Anybody who's buying up the supply of Bitcoin is doing so voluntary because they want to hold Bitcoin for whatever reason, maybe to store their wealth, maybe just to speculate, or maybe to convert into shitcoins. But I do like that, because it seems like it's real volume. I'm not, if Tim Cook's buying up, a couple of billion in a year worth of more Apple shares, it's like, all right, well, that's the best use of your capital, is to buy back your own shares instead of putting it into R&D to give me new AirPods that have a 10-hour battery life and a 5-hour conversation. And like, what the fuck? That's a decision, right?
Mm-hmm.
Tim Cook knows it is more profitable to buy back his own company's shares than to reinvest that into R&D to deliver new products to the consumer. That's stated in the action of buying back shares. Is that right or wrong?
No, you're right about that. No, that's why companies do it, because the rise in share price, and obviously it just elevates everything, and that's what makes investors happy for them. But instead of actually building for the long term, as you said, with AirPods, etc., and we're seeing with like Apple hasn't done anything really innovative in almost a decade.
Yeah, I mean, don't get me wrong. I love my AirPods. It's not that. I wish they were doper, but like when you're buying back all the shares, don't get me wrong, it's good for my Apple position. I have a nice position in Apple. I like that they're buying back shares, but you can tell that the market's slowing down because the iPhone looks exactly the same. Nobody's that impressed about it. Nobody's knocking down the doors going to get the next set of AirPods because they're exactly the same, except the case is now wireless. You can see that innovation start to slow, and then you combine that with a ton of share buybacks, and then you combine that with a ton of cheap credit, and the puzzle starts to come together a little bit, and you start thinking, well, maybe a cheap credit fueled bull market is starting to run out of steam because there's no more innovation. Nobody's even excited about new products. And the best use of your capital is to repurchase shares, because that's the most profitable thing you can do in a business that sells software and hardware products.
Yep, you're exactly right on that. I mean, like, when people don't realize, like, Apple did a quarterly golfing bar here, like, that's just a powerful signal. I don't think it really matters. And it's going to get really fucked here soon. It might even be this quarter. I think it's this quarter. I don't think we're going to make it much longer. Like, it could be this week. My point is, like, there's a great guy. You heard of Northman Trader on Twitter. Makes some great articles. Because, macro, and it's just very real about it. He like comments on President Trump stuff like, look what you said 8 years ago or 7 years ago, about how QE is so destructive for the economy. And so, and you can see it here, like the negative divergence here in the quarterly bar is just insane. And if we do collapse, we're going to watch, one quarterly bar just take back so many years of gains.
Yeah, it's insane. It moves so fast. I almost can't believe that.
Yeah, no, it's like, okay, we might go like there's that possibility that we melt up, but I've seen so many people talking about the melt up now in the S&P and just every market that I think, like, when the general consensus becomes something, it doesn't happen.
Right.
And that's why I think, like, it's just going to happen one day, and it's going to be bad, like 1987 bad, where like the Dow Jones loses 20% in a day or 22%, whatever it was, and that's so, like, I don't think people realize the shock that would cause to the economy. Like, we wouldn't recover from that.
Yeah, I mean, it could get really messy. I hope electricity still works so I can shitpost about it at the very minimum.
At the very minimum,
because Bitcoin Twitter and people on Instagram are going to be having a ball with this. I mean, don't get me wrong, it will be very sad, but I will take the time to do a little "I told you so" kind of thing and enjoy it.
We can laugh for a few minutes, but then it's going to actually matter to us.
Yeah, I know. I'm going to be so pissed. I might lose my job. I mean, whatever. Yeah, that's a good thing. I'll just get a new one like a normal person. I'll work hard. I'll save my money. I'll be frugal. I'm already frugal. But people assume like, oh, the world's over. Nothing, It's like, come on, dude. Pick your fucking shit up and get going. Yeah. Like, that's the reality. These boom and bust cycles happen because of cheap credit and nothing else. Mm-hmm. Like, the rules of the game. Pick up your fucking sticks and go play.
Yeah, all I could say is it's interesting because this whole thing has been just the whole time we've risen for 3 months has now just been driven by liquidity pumped by the People's Bank of China. Thank you, PBOC. But but there's real consequences to that, and the consequences are the volatility. It's about to happen. It's about to be insane. Like, I'm just gonna show a VIX chart because it's gonna get real. It's gonna get real insane here soon.
Yikes!
Yeah, like, if you can see the chart, it's just a bunch of spiking. And whatever happens soon, like, we're getting to a point where it's just going to spike soon. I don't know when, but when it does, it's gonna blow up the whole short vol trade, like, again, and it's just going to cause everything to go nuts.
Yeah. I don't know.
Yeah, it's definitely something to ponder about, because it's like, when it does happen, it's going to happen, and it's not going to be, oh, it's slow. No, it's going to be like the elevator just gave way and it fell. Like, there's going to be no cable attached to this elevator this time. That's the scary thing.
Yep. Have that hedge ready.
Yes.
Yeah, I was thinking back to the go to page 14 really quick.
Going to 14.
And this kind of goes, but this is on topic. That whole tangent was actually on topic, and I'll explain why in a second. So on page, there we go. Bitcoin as a reinvention of money. A quick quote: "To understand its impact, you need to have a broad understanding of both networks and money. The problem is most people don't, and that's exactly what we were just talking about. Nobody knows anything about money because it's not taught anywhere in school. We didn't learn anything about it, how it works, the different characteristics and attributes of what makes a good money. I'm just learning all of those more recently as an adult because I was trying to learn more about Bitcoin, and I'm frustrated that I didn't learn that a decade ago or even before that, trying to, figure out what money is. And it's such an abstract concept that if you were to ask like a child and an adult, you'd get two like different answers. And I think you'd have an easier time explaining Bitcoin to a child than you would to an adult, because a child would understand very quickly, like, oh yeah, one money is one thing. Yep, makes sense to me. Sounds good. And then you try to tell an adult, they're like, no, we definitely need legal tender laws and a bunch of different currencies in every country because that's definitely more efficient, and the government needs to make sure to tell me what's money so that I know when to use it. You see what I mean? It just doesn't. It's the most illogical thing ever.
Yeah.
It's dumb. But I mean, and it's a really good point, and I'm glad that it was brought up here because there's a lot to fucking learn about that topic, and that's the real rabbit hole that you go down when you take like the hodler's journey and start to figure it out. And
the hodler's journey.
Dan Held told me that when I met up with him a couple weeks ago, and he was like, everybody has their own hodler's journey, and it's true. Like, you Everybody gets into this differently. Everybody takes a different first step. And then when you make your way back around and you start reading, Austrian economics or listening to a bunch of Bitcoin podcasts or read the Bitcoin Standard, and you're thinking to yourself like, what the fuck is going on here? And why didn't I learn any of this or know about it for so long? And then you realize you're deep in the rabbit hole and have spent your entire life not knowing what money is. And then you wind up here in Bitcoin land, where stuff surprisingly ends up making more sense after you've had enough time to digest it. And one more quote on the reinvention of money that I thought was good. It was Bitcoin is not a payment technology. It's fundamentally a reinvention of money. Like the motor vehicle was a reinvention of transport, not a better horse and cart. And that's an important distinction because the motor vehicle was significantly different than the horse and cart. And people assumed that there wouldn't be a different technology after the horse and cart, like it would always be that way. And I thought that for a very long time. And then you have the automobile come around, and there used to be, there were regulations in England that you needed like spotters and flaggers around your car to warn people on the street that a car was coming for safety reasons. Because it was so much different than horse and carriage. Yeah. So when I tell people like, yeah, there's a good chance we might all be using Bitcoin in a decade or two, and it'll be really normal. People are like, that doesn't make any sense to me. Why would it be like that? A lot of people also didn't think the internet would be around for a long time, like our good friend Paul Krugman.
Poor Paul.
His quote is in this Bitcoin Times article, and I loved it, and I wrote it down. Just so I'm going to say it now because
let's do it now. We're talking about it.
Yeah, it's too funny not to talk about. The growth of the internet will slow drastically as the flaw in Metcalfe's law becomes apparent. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than that of the fax machines. Paul Krugman, Nobel Prize winner in economics. It's great. It's great. He totally blew it on that one. Totally blew it. And this is apparently, according to, many, to be one of the most prized academic thinkers in all of economics. A Keynesian thinker, I might add. So you really know he doesn't know what he's talking about. And it's great. So you can see that these people can't see this coming. And there's another quote, same topic. I'm going to read it right now. The Americans have a need of the telephone, but we do not. We have plenty of messenger boys. Sir William Preece, Chief Engineer, British Post Office, 1878. So put yourself back in 1878, and you have, this is pre-telephone, and you have the chief engineer of the British Post Office saying, yeah, I could see why the Americans, need telephones. They're starting out fresh. They can put up the infrastructure. Sounds like a good idea. We don't really need that here. We have plenty of messenger boys. They're running around dropping messages and notes off all around the city and the country. That works perfectly fine. We won't need the telephone. And that was a legitimate response, right?
Mm-hmm. Well, there you go. I mean,
right.
Yeah. And so I was going to say, just Telegram changed so much stuff. Like when we talk about timing and stuff like that.
Yeah. So much has changed, and people think nothing ever changes. And there's people who were alive who were thinking the telephone isn't that great of an invention, and it's not necessary. And then you have the same thing with electricity. You have the same thing with automobiles. You have the same thing with trains. You have the same thing with planes. Now you have the same thing with money, and people aren't really sure what to do about it. And you have a couple of woke individuals who have, done 20 hours of research on Bitcoin and sound money and think that there's a little something to it. And they have a feeling that we probably won't use fiat money forever. And it could go away within the next couple of decades, actually. And that's it.
Yeah, I was going to add on to that whole little tangent about the car there. So like Carl Benz did the first, I guess you could say, automobile in terms of like combustion engine was Carl Benz in 1885. But when you talk about steam engine, which are steam powered cars, you can go back to 1800. There, basically the turn of the 18th century, which is crazy. So automobiles took a while to really come to fruition. You're talking a whole century.
Yep. That's a long time. I mean, even the internet took a long time. I guess when did like DARPA
Well,
net
well,
start? Like in the 70s or
so TCP/IP was I think late '60s. So that was the foundations,
okay, there you
right?
go. I mean,
And
a
then
long fucking time.
yeah, and then you talk about the ARPANET or whatever, which was all those military institutions and universities basically, and that was '80s. So that was like shit. There could be a nuclear war, so we need to communicate, and that was the
Right.
purpose of that.
Yeah, so in other words, it took a pretty long time. But now when you're dealing with exponential technologies and you already have um, so many technologies that have come before it, they can get exponential way faster because of the spread of information. It's much faster, and the education is happening quicker. If I couldn't have done the amount of research on Bitcoin 2 years ago that I can today because so much content and information has happened in the last 24 months. And now the next 24 months, there's going to be an exponentially more amount of content and information than the last 24 months. And that cycle repeats. And you can even see that with the growth of the Lightning Network right now. You have, a couple of nodes starting off in January of 2018. And now I think we're over 4,000 nodes. And it's April 14th of 2019. So you're starting to see that hockey stick growth curve. And that makes sense with any kind of exponential technology that really relies on users joining a network and helping it to grow. It's just awesome to see, and there's so many similarities to the internet, and that's actually one of the next sections to talk about. I think it's on page 17 and 18.
Scrolling over. So 17, 18 different pages here. Right there. Just get start.
Yeah. Just Bitcoin and the internet, and this is just a good thing to keep talking about since we were already on the topic. This first quote was, "The phone companies dismissed it because they measured its capabilities through the same lens via which they measured themselves, the number of phone calls and quality of the calls. And when they saw it taking off, they asked, how can we buy this internet thing?" And this is interesting because you couldn't invest in the internet protocol itself, but now you kind of have the chance to with BTC because, as we said earlier, the currency is baked into the protocol itself. So they couldn't mine, not mine, they couldn't invest in the internet protocol itself, and now they have an opportunity to do that. And it goes on to talk about more about networks and the internet. And one of the reasons that the internet won was because it was open and free to use, and it had a very stable foundation. It didn't do too much, right? It was a very simple structure, but it allowed for more complex tools and pieces of technology to be built on top of it. And that's another similarity you have with Bitcoin, that the base layers, not too crazy. It doesn't have Turing complete smart contracts or whatever the fuck Ethereum is doing, but it's stable, it's rock solid, and it's being built in layers as any good technology begins to scale, because you don't want to just, let's say, for example, double the block size and get double the throughput, when in reality you need an exponential scaling capability, and the only way to do that is to build layers on top of it and use the base chain as an anchor for those technologies. So there's just so many good similarities, and it's no surprise that you have people like Wences Casares, the CEO of Zappo, who was I think the founder of like the first internet service provider in Argentina. So he saw the internet was going to be huge, and he built one of the first banks on the internet there. And he talks about it all the time.
That is he a billionaire now or what?
For sure. I mean, he's even said I haven't almost I can't think of the word, like an obscene amount of his personal net worth in Bitcoin. I want to say it was probably like 10% or something. Like, a very risky amount for someone who's already worth a ton of money.
That's what Mark
And
Cuban was talking about too.
and you have a guy like Wences who's like, yeah, man, I grew up in Argentina. I'm from there. I saw the internet coming about. I said I have to get these people on the internet. It's going to be huge. Crushed it. And now he's seeing all these similarities with Bitcoin. And he's lived in a country that's gone through hyperinflation and repegs of their currency more than once. And he's seen his friends and family lose everything overnight a couple of times. You start to reconsider what money is. And that's the perfect person to have seen not only the internet come to fruition, but to see fiat currencies kind of hyperinflate and the devastation that it causes, to have a really good understanding of Bitcoin and why it's so valuable to someone who has to store their wealth in a currency that can't be easily inflated. I don't have that experience, right? The dollar's worked pretty good for me for the last 30 years. Don't get me wrong, it's more expensive to go to the movies, but I haven't had too much of my wealth stolen over the last 30 years.
Yeah, it's definitely interesting. Obviously, right now, like when people talk about payment side, like there's Venmo, there's Square Cash, there's so many different things. And some people talk about like we need a faster currency. I mean, obviously there's a Lightning Network right now, but the important thing is we've talked about is just the immutability and the security of the layer and its hardness in the day.
Right, exactly, and that's what really makes Bitcoin so special, and separates it from everything else. There was one other quote I wanted to read here. It was and whilst I know it sounds far-fetched to think that today's financial institutions will one day be on-ramps for Bitcoin, remember that 30 years ago it was completely insane to think that phone companies would merely be connection points for the internet.
Exactly.
It's so that was a light bulb moment for me when I was like, yep, I didn't think about that one. Makes total sense.
Yeah, it's very interesting to say the least when you think about that side of it. Where we're going to be even like in 10 years, even 5 years from now, and like we're here, you and I talking about like what's going to happen in the next few weeks. Like earlier when we were looking at some of these charts, because that's like right now. I mean, obviously a long-term focus, but I'm like day by day right now because there's just something's going to happen one of these days, and it's going to be big, and not just Bitcoin. I'm talking about just equity markets, debt, you name it. There's a lot of different things going on. Whether you talk about Brexit, or you talk about the European Union. I know I'm getting a little off topic here. We talk about geopolitical risk and stuff and tensions. No one's paying attention to what's going on in France. France is just week in, week out having these riots and protests. And I don't think people realize how insane that consequences is. And then same thing with Justin Trudeau, who might get impeached in Canada. But there's so many different things like in terms of geopolitical tensions that don't make for stable markets that are happening right now. And then you can talk about a bunch of other things. But those are just a few. And then the European Union too. What about the European Union dissolving? You're talking about a major fiat currency disappearing.
Yeah, that's big. A lot of people don't really think about the heightened political risk having anything to do with impacting them personally and like their money, which I could understand why you wouldn't think that would have anything to do with you. But don't get me wrong, for the people who are in the EU, if the EU suddenly, collapses or, you have an issue with the currency, even just the transition of going back to a different money would really suck. It would really suck.
Yeah, it's just exactly like how would those countries put in a new fiat currency or asset back? That'd just be such a struggle for all those countries. I think 30 countries in the EU, something like that. It's pretty. Am I wrong?
Yeah,
something like that.
I wonder what the transition into the euro was like.
Yeah, because it started in 2002. Like, think about that. Like,
yeah, it's like relatively recent.
It's very recent. Like when you think about the grand scheme of things, the euro is really recent. 18 to 17 years.
Right.
If even.
It's yeah.
So like you and I obviously born before it, so we lived in a time without the euro. And what are the odds that there's a very good chance that we're gonna live beyond the euro? Very solid chance, I think. I'd like to think.
I'd like to think I will outlive the euro for sure.
Yeah. I wouldn't be surprised if 5 years from now. And I know it's okay, it's not a huge time, but still, a lot can happen in 5 years. When you look at like what happened in 2008, 2009, it happens pretty quick.
Yeah, for sure. And that's an interesting topic. I think we kind of touched on everything um, else in that paper, just about the networks and simple protocols and the Lightning Network. But since we're talking about political risk, the last page 26 or close to the last page talks about the societal stack, and you have, and it shows societies built on top of money and communications. And I thought that was really interesting. And it made me remember Nick Szabo's really good article on social scalability and how important it is to have a money that is socially scalable, right? And BTC scales because it's trust minimized, and I can person A can transact with person B without knowing them, and they can trust that either the money they're receiving is good and the money that they're sending them is going to get there. And that scales really well because trust has been minimized to a very low level. And one of the quotes in here was, "Money is the ultimate tool of human cooperation, and it's how we've created everything around us." So when people tell me it's just money, they truly don't get it. And you can see from the graphic of the societal stack, money is one half of every transaction, and it sure as shit plays a big role in how society functions, and with the division of labor and the growth of a great society. So when you have a money that isn't acting as it should, you get things like malinvestment, and you get things that cause boom and bust cycles. And the world would probably be a much better place with a sound money, and it would really help society flourish, and humans just flourish. It'll be an awesome time to live, and I'm excited to live through it. But you can see that risk playing out, and the fiat money today just really isn't working very well in a lot of places. And I think political risk is a big response to that.
Yeah, it is 100%. Like as Paranoid Bull talks about, political risk is one of the biggest issues that the markets haven't priced in right now.
Yeah, exactly.
Yeah.
It's not priced in. That's a really good point. The political risk in no way, shape, or form is priced into any market, I don't think.
Yeah, and it's because of the markets we have. They're driven by central bank liquidity, so they they're risk free markets. Risk free quotation marks. And here's a good quote from the screen. You can see it. Nothing great was ever built on a shit foundations. It's that simple. Oh, Alex Svetsky.
Yep. I mean, and that kind of sums it up right there. So you've had this crappy foundation, and you had this crappy money, and it's no wonder that there's so many shitty things going on in the world.
Yeah,
it makes perfect sense. I mean, you need to look at the root cause of a lot of these problems, and a lot of them, if you dig deep enough, you can tie it back to cheap credit and the inflation of the money supply. And don't get me wrong, there's other issues, but when you look at the root cause that allows any of them to happen, that is the root cause the majority of the time. And it's, you solve the money issue, and you solve a ton of problems all at once, and everyone's going to have to come to terms with that, because you wouldn't be dealing with any of the malinvestment. You wouldn't be dealing with, frivolous, spending of tax dollars on stuff that doesn't work or doesn't really improve the services that are offered to citizens of countries. All that stuff starts to go away, because nobody's going to spend real money on it. It doesn't make any sense. No one's going to give that up. But if it's printed and given to you, yeah, sure. That's what my budget is. Yeah, go ahead, spend it. What's the difference to me? It's not my money.
Mm-hmm. I was gonna say, here's a quote. I'm not gonna say it told me, but it's a pretty good one. Everything boils down to two things: money and sex.
Yes, that is a good one.
I mean, it really, when you think about it, everything does. And when you look at like a good example, I think you liked my tweet or something. There's that congresswoman, ripping apart Jamie Dimon or something about minimum wage or whatever. But at the end of the day, it's not Jamie Dimon. You got to blame the currency, the money they're using. That's why That's why $16 an hour or whatever that woman was making, who she was talking about, doesn't pay the bills. $16 an hour in 1965 would be much different than $16 an hour now, or $16 in 1930 was much different than $16 an hour now.
Right.
It's such a different, and that's why, like, when you look at the family unit and you talk about that, like the 50s and 60s, one parent could work and one stayed home. Obviously, generally then it was the husband that went to work, the wife stayed at home, and then obviously as the money kept getting debased more and more, you saw in the 80s, 90s, and obviously in 2000s, you have both parents working because it is that much harder to keep up with inflation, and people don't realize how much it's creeping into their lives because it's just happening. And as we talked about, you mentioned earlier, you don't learn about it in school. So unless you go down that rabbit hole yourself, unless you do the research yourself, you don't learn about it. Like, shit, if every kid had to read the Bitcoin Standard, they don't have to read the fucking Bitcoin part. They just read the part about money, which is the first 11 chapters, which is all the book basically. They would be like, wow, what's going on here?
Yeah, that would. I know. It's a shame. I don't know how much time I wasted reading stuff at school that
didn't matter.
I wish it didn't matter. I mean, like I graduated, I got a job, and I'm like, yeah, well, that was a waste of 4 years. It was a lot of fun, but I didn't really learn anything. Like you end up learning when you get to the job. That's the whole point of going, and you still need to be trained. There's nothing in any of the books that you're going to read that will. None of them taught me how to build databases in Excel and run pivot tables and slicers off of them and build dashboards. Like, I had to fucking teach myself and put in late hours and figure it out and watch literally YouTube videos on how to do it. And that's like an actual skill that you need to learn if you do any type of finance job. Like, you need to be able to use Excel and use pivot tables and build stuff that works. You don't talk about it in your microeconomics class. It's such a waste of time. I'm glad I went, but it's, I'm certainly not going to force my children to go because they're going to be smart enough probably not to go anyway. College won't even be a thing.
College is not going to be a thing.
20 years. It's not going to. I don't know why I'm even talking about it. Everything's going to be like Lambda School or pay to get an apprenticeship from somebody who is pumping out fucking whatever, welders or software engineers, nurses, doctors, chefs. Like, any skill is going to be so much more efficient to learn. Like, it will be awesome, but no one's going to be taking out $200,000 loans to learn nothing and then not get a job that can ever make you enough annually to pay off the debt plus interest that you owe.
It's so fucked when you think about it. Like, people just, their whole lives ruined, and they talk about, like, there's so many millennials that just aren't starting families because both parents are in debt, just up to their neck, because whether they just went to undergrad or even grad school too, and they're over 100K in debt.
Yeah. I mean, I'm in California. I'm in the Bay Area, and I just saw something recently. The average millennial couple living in San Francisco who makes $200,000 a year as a family thinks that they don't have enough to have kids. $200,000 and they don't have enough to raise a child in San Francisco. They don't think it would be possible. So when you think about that, it's like, okay, well, what the fuck, Yeah.
It's crazy how cost of living in certain cities just goes through the roof. And it's like, unless you have stupid money, and I'm talking like fuck you money, you're barely getting by no matter what. I mean, 200K is nothing that joke about, but what you don't realize is like the inflation that just keeps happening. And that's what they talk about. Paranoid Bull mentions, bailouts and whatever. It was just the whole QE thing was just basically socialism for the rich, and it makes sense because you think about when you talk about, like, and I have nothing against making money. Obviously, if you follow me at all, you understand I enjoy that part. But my point is they bailed out everything. So instead of letting the system reprice itself, free market way, it didn't, and you have all these assets that inflate.
Yeah. And then the taxpayers footed the bill.
Oh, exactly.
But that's right. And you see all the other assets that your traditional or typical middle class citizen isn't exposed to equities or the real estate markets, and others are, and they benefited greatly from being in those assets and not keeping a ton of cash, whereas those that are less fortunate and hold mostly cash, or most likely they're living paycheck to paycheck, don't get a chance to benefit from other investment opportunities. I hope that very soon they have a money that won't steal from them, and they'll be able to actually put something away and get themselves a home if that's something that they want to do, or whatever. But if money functioned as it should, they wouldn't really be in the mess that they're in right now, where they're getting hit with ATM fees or overdraft fees, living paycheck to paycheck, all that stuff. Hopefully that's gonna come to an end, and everyone's gonna have a real opportunity to opt out and save in a money that will not inflate on them, and they can store their wealth through time and pass it on exactly how it's been done for thousands of years prior to fiat money.
Yeah, I was going to say something earlier. We were talking about and basically in 2008, 2009, instead of letting everything just default and keep, banks were bailed out. Like, all the big banks were bailed out, except for Lehman, Bears, and there's other ones that went under. But they were bailed out. Like, I was reading an article about, like, Citigroup was bailed out, and that was a local, Obama had close ties with it, so he was like, okay, this one has to get bailed out, blah, blah. And it wasn't that Citigroup was as corrupt as Bank of America or other ones, but they were run so poorly. They were so mismanaged. It was such a shit show. They were insolvent is what they were. And they were bailed out, and so what happens is all the Americans that everything should have just defaulted and we had to restart. Didn't happen. Everyone got stuck with the bad loans though. People still had their student loans, they still had their car loans, and while banks got to loan money for 0.1%, basically nothing, loaning for free, everyone else was paying like ridiculous rates, like 19 to 29% in credit cards, like 5 to 6% mortgages, 9% student loans. So the rates were just ridiculous for everyone else, and there's these huge margins, and banks obviously profited enormously.
Yeah, I mean, that's the name of the game, man.
That's exactly what it came down to.
This was, what do you think? This was a pretty good episode. We talked about a lot of shit. This was awesome.
I'd say we did pretty good here. I think we covered quite a bit in this episode. I think and I apologize, I took us a little off track here, but I think we brought in the article, and then we also just kind of, let it run.
Yeah, we brought a lot of the stuff that we'd like to talk about kind of back into this article, and it was great. I highly recommend it. We will put this article in the show notes. I sent it to a ton of people today via DM. Definitely a good read. Make sure to like and subscribe to this podcast or our YouTube channel. Leave us some comments. Let us know what you think.
Reviews, and ratings, and Apple Podcasts, please.
Yep. Yeah.
It helps
even if
a lot.
It's a bad review, we'll take it. But we do appreciate it. And the latest episode was just released today, so go ahead and check that out. And shoot us some topics that you want to hear about for the next episode. All right. Thanks, everybody.
Thank you.